Hello and welcome to another update video about ADA. ADA hasn't really moved much over the weekend. We had a little bit of a corrective rally there. Price challenged the Thursday or Friday high, which was put in place here at around 35.5 cents, but hasn't broken it, really hasn't sustained above it. And it looks a bit like as if we're working here now on wave C, at least wave C of this B wave corrective pullback. So remember what we talked about in the previous video, the wave count hasn't changed. The idea was, okay, you know, in the most bullish case, this was a wave 1 to the upside, this rally from the Monday low to the 7th of August high. And then we had a pullback, which was shallow, which we could call a wave 1 and a wave 2. So it is just not very reliable given that this wave 2 was so shallow, but it is a valid count, okay? But the problem is, because this is only a 3-wave corrective rally, it doesn't give us a very bullish. Yeah, it's not, you can't trust it, okay? So you can't trust it, you have to mistrust this structure, but still it is a valid one, so I have to show it. So I just show you the support levels for this structure. That's all. I'm not predicting support will hold or anything. Simply showing you, the key structure. And if you want to trade it, that's up to you, but Bitcoin is leading at the moment. So these altcoins, I don't have a very good feeling about many of these altcoin structures. They need to convince me again to have a bit more trust in them. But I think that's clear from the videos. Talk about diagonals only really here, and yeah, they are very messy and they are difficult to trade, difficult to track. So don't be surprised, that means if support levels change or even the microstructure changes on some of these altcoin charts. They will do, they do all the time, especially when we're dealing with diagonals, and diagonals often break. I mean, in this cycle, so many altcoin charts broke and so many diagonal patterns, because most of them have actually been moving in diagonals really, and these are not trustworthy structures. So the idea is then from this Wednesday low, an A wave started, which is a 3-wave rally. We have an A wave down, an overshooting B wave, and a C wave down now in the B wave pullback. So that means wave 1 was a 3-wave move, wave 2 as well. Wave 3 would be a 3-wave move as an A, B, C structure. And we'd like to see the third wave get to 42 cents at least, and it would need to hold 32.4 cents as support. So the micro support area that I'm tracking here is defined between 32.4 cents and 33.9 cents. This is micro support with additional support at 33.5 cents and 33 cents. Yeah, so only below 32.4 cents, I can say that the orange count, which is the more aggressively bullish one, but a diagonal, so it's messy, that this count is likely going to fail. And it's confirmed to fail with a break below 31.6 cents, which is the red line. Why is this so important? Well, don't mix up support with invalidation. That's the invalidation line. It's the wave 2 low. A B wave shouldn't really go below it. I mean, technically you could say, okay, the B wave could technically even overshoot to the downside. Is that something we trust? No. Is this a pattern I would follow? Not really. And it would then become more likely that we're actually in a larger wave 2. That's probably when I would start to track the yellow count anyway as preferred. Already now, I mean, I don't really say which one is preferred because they are both reasonable scenarios. I can tell you that I don't trust the orange count. And I would, in this case, if I was trading this, which I'm not, then I would position for the lower support area. Okay, it's the same when you follow 2 analysts. I would always go with the more bearish one because that gives you that gives you a support area where you can position against. And if the other one, if the one that's more bullish is correct, at least you have at least a position, but maybe a smaller one because you positioned for the lower one. But if the one that's more bearish is right, then at least you're not getting stopped out. And that's just, because the price could easily break upper support. So you're prepared for that, right? That's the main thing, but that's the individual trading decision. But I can tell you that below the upper support area, the yellow wave 2 becomes more likely. In this case, we're dealing with a large ABC structure, which could actually send us down here into the lower support region. That could take some time until that's finished. I mean, we haven't even reached the upper support area. I think it's going to be a very interesting start to the next week. A lot of altcoins have some promising structures, but again, they're already morphing into diagonals, so very ugly structures. That doesn't mean it's bearish, but it means we have to be careful, cautious. I would be cautious anyway with altcoins, especially after Monday's drop. So levels are clear. And so I think at the moment, in the very short term, there's no sign that a low of sorts has formed here. But a break above the intraday high, which was formed at 35.6 cents, I think that would be quite a good indicator to suggest that the wave C to the upside has already started. So that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.